and welcome to Finnoviti 2021 once again. And this time around, we are going to take up one of the most important areas or two of the most important areas that are of interest to the financial services sector. When we innovate, Open API is a no-brainer. This is coming in the foremost of the technology when we are speaking about innovations. When this innovation of Open API comes into picture, automatically tags along with it is the security threat. Organizations have been working round the clock to make sure that on one side they get benefit of the Open API, and on the other side they also try to keep or mitigate the threats that come along with the Open API technology. The RBI recently has brought out some very interesting regulations when it comes to the making the payments and the Open API more and more stringent and secure. We have Mr. Asim Ahmed with us, who is the Senior Product Manager of Cloud Security Asia Pacific for Akamai. And he is going to share with us a wonderful topic, decoding API securities for financial services. Asim, I invite you to the dais to share your wonderful talk for the next 20 minutes. Thank you.
Thanks a lot. I just want to start by thanking for making time today to hear me out. And I also want to extend my gratitude to Banking Frontiers team to provide us this excellent opportunity. What I want to talk about today is a crucial and timely topic of API security and what it means for financial services industry. A lot has been already said and written about this topic on day in and day out. But when it comes to implementing the right API strategy, organizations still face a lot of challenges. Through this topic, I intend to cover API trends, attack surface for APIs, and some of the best practices that the organizations can adopt when they try to implement the right API security strategy for their organization. So without much ado, let me share my screen. So before we get started and dive deeper into technical aspects, I think it's important to understand some of the trends that we see in financial services with respect to APIs, and how in work out, right? Business is the reason, obviously, for introducing APIs, because today superior digital experience acquisition is often the byproduct of the innovation that is happening on financial services. So, banks, the financial services using agility with use of APIs to for more and deposits in the banks, monetize more financial services with new services and new products is a core for banks. Obviously, APIization, so emerging products and forms rather than just building is a key focus area for banks and services. And fintech ecosystem has driven this growth of APIs beyond the traditional four walls in financial services. A lot more focus is given in, reducing the errors for the APIs and curtailing the rollout issues that organizations face while, trying to have more wider API adoption. Now, while all of this is happening for the good of business and increasing user acquisition, obviously one of the key focus areas for the organization still remains security. We've seen the more adoption of API has led to expansion of attacks on APIs, right? We see, especially for financial services, OFX login, transactional banking login, other API endpoints for payments, transactions, an example, constantly under attack by cyber threat attackers. In terms of some of the trends that we've seen for financial services in 2020, financial services still continue to be one of the most highly sought target industry by attackers. And obviously, we all understand one of the key motivations behind being the level of financial motivations that the cyber attackers have. So DDoS attacks still continues to be one of the most targeted attacks against financial services, and more so on APIs. Web application attacks are ever growing because the level of interest in the data from financial services is immense for malicious actors. We see local file inclusion, overtaking SQL injection, especially as a target vector in financial services attacks. And interestingly, we've seen over the last few years, APIs in financial services are getting highly targeted as compared to other industries. We see up to 3 times more attacks on login APIs and other sensitive API endpoints that carry out some transaction data for financial services to be under more attack than any other form of transactions today. So overall, while API has brought out a lot of innovation, has led to digital acceleration and adoption across different channels, there has been a lot of issues that organizations face when they try to roll out APIs or try to adopt APIs across different channels. Many organizations today fail to get the real value out of APIs during the initial phase when they roll out APIs, right? Many APIs stop working because either they are buggy or they do not use or do not see user interaction as much. A lot of APIs today, more than 70%, encounter performance issues when they are rolled out, and there are reliability and functionality issues that get uncovered once the APIs start to roll out on the internet, right? And the basis of all of this, as it happens to other applications as well, there are a lot of security issues that are uncovered once the API start to roll out. So in terms of balance, one call as API connects, how do you really balance the asks, and the threats? So business has to ask, you as a team may own limitation what you can support, and then there are these targeting your API that are exposed on the. So business about innovation and speed, how quickly can you bring services and microservice market, make sure that it's stable or the API is stable as it's roll out and bring about superior users. Then you have to, right? Security team constantly worried about the API exposure. Many of us today do not have right tools and visibility of what is our exposure today. Right? Many of us are from technical yet non-development big. So our focus is on the non-technical effects of security from the development example, right? There is a more on API security. The security tools today are focused on app development, testing of security, tying that with OS work as an example, but they're not as tools and understanding of how do you really API recently change, they constantly, right? From the attacker's perspective, the attacker is constantly on a lookout. However, the exposed interfaces on it, many of the recent cyber that has happened on APIs have happened because organizers overlooked those APIs. They didn't either didn't know about these or have limited protection on that. How do you protect against unauthorized use of API? Many of organizations today have APIs on the internet without controls, right? API data is another example of how the attackers trade the data from the API. A lot of breaches happen to APIs, as you may know, right? And one of the key prominent attack vectors that we see against APIs is the attack of account takeover or credential stuffing. From the attack, attack service for APIs, you need to be looking at it in a more holistic way. APIs come with some inherent problems that are very strictly applicable to the way APIs work and the API servers work. And then there are different other attacks that are, API attacks as well. So starting from authentication attacks, that can be targeted towards the open API endpoints of, the attacker scraping the API content or, exfiltrating the data from the APIs without, or bypassing the authentication without going through the authentication controls, to DOSing your API endpoints by sending a lot of volumetric traffic on APIs. And then they have API specific attacks, classical application attacks within OS top 10 sort of security vulnerabilities like SQL injection, cross-site scripting is an example. Then there are other inherent problems like parser-based attacks, which are very specific to APIs and application DOS conditions that could be caused within APIs. Now, one of the examples of this is exploiting API parameters. And this is just like you see in your classical applications or HTTP-based applications, attacks like directory traversal, command injection, where different parameters of the URL or post body could be exploited, with or without the use of JSON or XML or API content. The same thing holds true for APIs as well. So the attackers will try to exploit your API parameters either in the query or in the post body, and trying to carry out different attacks like directory traversal, SQL injection, cross-site scripting attacks, by exploiting those parameters. However, what's more difficult to understand for many of the security practitioners is the problems that APIs bring inherently. And one of the problems is the deserialization attacks, right? Which can lead to remote code execution. So deserialization and serialization is a process of converting into objects into readable format in layman terms, the way the parser handles the API requests, because these are JSON or XML content, which is kind of crafted in a specific way, or a schema, as you may call it. So using deserialization issues, if your parser is susceptible to that, the attacker can create or craft specific queries or JSON content or a schema that could lead to execution of remote file or remote code on your machines. In this specific case, you can see, that there is a .sh file that's getting executed as a part of the code. It's all possible in this case because this is this particular JSON function, and this particular parser is able to deserialization problems. The other problems that come along with APIs is the local DOS conditions, because APIs are deeply nested structures. A specifically cleverly crafted request by attackers can lead your servers to get exhausted on resources quite quickly. So one of that kind is called as hash collision attacks, where using the specially crafted request, the attacker can cause multiple hash collisions on your APIs. So if there is a vulnerable JSON decode function on your API server, your API server can quickly slow down without needing too much of such requests, right? So even with a smaller subset of these requests, attackers can overwhelm your API server quickly. And then you have deeply nested structures, because APIs have the nesting of different objects underneath. The large payload of, for example, one of the above mentioned pattern, which is sent to a vulnerable deserializer, it can slow down your API servers in a matter of few minutes, if not seconds. Another common problem is the accident leaking of API keys, and this is so common today. Many of the developers today, either your own developers or third-party contractor, use sample codes that are posted on GitHub or other repositories, right? And many times, knowingly or unknowingly, it happens that your API keys become a part of that sample code and gets posted on broader platforms like GitHubs. The attackers can get access to these API keys and use them to gain unauthorized access to your networks, your microservices, as an example. Now, we've spoken about some of the threats for APIs that we see commonly across industries, more so in financial services industry. Now, what about the current measures, and what are some of the gaps that we see for API security? What we see is most of organizations today still relying on traditional measures of protecting their APIs, right? So things like using encryptions, IP-based throttling, some of the signatures matching, on your web application firewall as an example, or your access control, using weak access control mechanisms. Now, while all of this is still needed, these are still primitive and traditional measures of handling API security. The gap that we see more so is, how well the organizations test APIs today, because most of the testing is still limited to the application releases, mobile application, your standard HTML, or web applications. API security testing is still not prevalent in many organizations, and they're not consistent security frameworks that are being used. API governance is another part, right? We all have our security governance, but APIs seldom find its way into the overall API governance of that. Scaling is a very important part of your API strategy. Many organizations realize only after they roll out their APIs that they didn't not anticipate the level of traffic that actually came through on their APIs, causing their infrastructure load and causing for API endpoints to go down. So scaling is a very important consideration. And on top of it, a application security strategy, which is very focused on APIs, is a need for the hour. So some of the common challenges that we see on APIs today is, lack of API ecosystem visibility. Many organizations today do not know of how many API are exposed to the internet because APIs change very frequently because of this needs. There are industries and customers that are releasing more than 10 API versions in a day, right? So it becomes very difficult for the organizations and more so for security to have a visibility of ever-changing API ecosystem. The other is partial or incomplete security strategy and tools. Many organizations today, either as I in a previous, have implemented very benign API security strategy, or they do not have the full tool set that they are required to have robust API security implementation. Account takeover fraud and activity is one of the key challenges that are being faced in financial service industry today. Whether you are a fintech or traditional banking organization, if you've got your API exposed on the internet, especially the login API, you want to see account takeover attack at point of time. And because of these attacks, since these attacks are distributed and mostly, coming out from automated tools such as botnets and scripts, the traditional measures cannot protect organizations against account takeover fraud. And then you have performance and scaling problems, very consistent, be seen across different industries, also with financial service industry, right? So what you could do for handling some of the challenges is, more important thing is to integrate your APIs information in the security analytics tools that you have. A key example is Akamai has API discovery mechanisms in which if there is any API endpoint that get onboarded on the platform, it automatically becomes a part of a security analytics. So you can quickly understand, if APIs are being protected, if your API are receiving errors or any securities, and within a click, you can onboard or integrate those APIs in security platform. Then another key focus should be use defense in depth strategy for AI security. Use the AI security architecture that gives you both positive and negative security model and to holistic coverage of API security. You need to be protecting website login pages, web and apps from automated tools such as bots, which cause account takeover and account, right? And ultimately, all of this can be used, or instead of a disjoint security posture that does not be each other. Use of cloud and edge platforms such as can help you deliver performance and unified security controls to manage data and your application security across different point of application presence. So from perspective of, what are some of the key things that you need to be keep in mind, or as I call it, API security checklist. This is a sort of a framework that you can follow, right? It starts with discovery. So understand your API ecosystem, categorize your APIs, have your asset categorization done for your APIs. Have a very focused testing on APIs, just looking beyond the traditional way of testing your applications, right? Formulate the right rollout and rollback design and strategy for your APIs. On the protection side, you need to be looking at multiple aspects of the APIs. Protect your user identities using protection against login abuse as an example. Protect your APIs from DOS and DDoS attacks. Use positive and negative security model to give you defense in depth approach for API security, and optimize your API security using governance, right? Authentication, authorization, API key lifecycle management. That's typically what comes under API governance, and you need to be looking out for that, right? Ultimately, once you've protected your APIs, obviously there has to be a continuous assessment throughout, and that's what we call as analyze phase, right? Have a risk assessment framework that encompasses or includes APIs. Understand the scale of APIs, understand where you fall short today, and analyze for the future requirements and peak requirements for your APIs, right? And there needs to be API specific audit that needs to be done alongside other security audits that you have. So what I can prescribe as one of the right security strategy is, as a reference, is the edge security architecture. This is an edge security architecture of how we handle API security and discovery and performance on Akamai platform, right? So on the left, you see the legitimate traffic for APIs coming from browser apps and servers. And then you have malicious traffic coming from attacks and browsers, right? It could be a JSON, XML, GraphQL, REST-based implementation. Now, all this traffic, if you look at Akamai implementation, it first hits Akamai edge servers, right? And edge is what is closest to your end users and also closest to the attackers. So we are able to provide you the security benefits as well as the performance benefits right closest to the attackers and the users. So using this platform, you can do a bunch of implementation and feature implementation and things like edge caching and API acceleration. Then you can have API discovery implemented, using which you can get a continuous visibility of changing API ecosystem. And then on the security side, you can implement various tools and features like DDoS protection, implementing a positive security model with API specification, negative security model using WAF rule inspection, and implement a bot management strategy that protects your API login endpoints against credentials abuse attacks, right? You can on top of this, you can apply API governance using API gateway that provides you with authentication and authorization features, to your APIs. And all of this can be implemented irrespective of your origin presence. So if your origin is within data center, cloud services provider, or multiple cloud services provider, using edge security architecture, you can implement consistent layer of security across all of your points of data as well as applications. So what we bring a value proposition for financial services as Akamai is aligning to your imperatives, which is optimizing your experience, providing protection for your brand, and providing protection against fraud. We help you with cloud and digital transformation, and again, 24/7 cybersecurity monitoring and support for financial services. With that, I come to end of my presentation, and I just want to thank everyone for taking time and listening to me today. All well and stay safe.
Thank you very much, Asim. Thank you for your wonderful presentation, and it was a real great treat to understand the 360-degree perspectives about API securities and how the organization need to rethink their API security right from the ground level when you get into the API bandwagon. Thank you very much. We look forward to more such sessions with you, and it's time to move on to our next session. Thank you very much.
Thanks a lot.
Hi everyone, hope you're having a great time. Do not miss to visit our exhibit area. Our exhibit area offers an attendee an easily accessible and immersive way to view and experience the latest innovation in the BFSI sector. Do visit our exhibition stall and benchmark the latest innovations. Thank you. you're enjoying the session as interestingly as we have put it together. We are also happy to announce that the first BFSI visitor to HP, Denado and Equity stalls who will engage with their representative will get a gift voucher. So please hurry up and claim your vouchers now.
Hello and welcome to Banking Frontiers Live. We are discussing one of our most favorite topics today, the payments industry. And I have one of the most distinguished person here with me, who is Michael from Swift. Michael Moon is a global payment expert, a great friend, and a wonderful professional from the payments industry who has been sharing us a lot of interesting insights in the last few years during Cybos. And let's learn a lot more from Michael on what's new in payment in the pandemic times. Michael, welcome to Banking Frontiers Live.
Thank you, Babu. You always provide such a warm welcome, so it's always a pleasure to speak to you. And thanks for providing this opportunity for me.
Thank you, Michael. Michael, let's start our conversation with some very interesting insights that we got about Swift's strategy on instant frictionless payments and securities processing that is marked by the next generation digital platform. So can you throw some light into it?
So Swift, for the last 12 months or so, Babu, has been crafting together with our cooperative, so the industry of banks that use Swift, a new strategy for the organization. And if I start with the drivers, if you like, so what is actually leading to some of our intent here and the types of things that we will be introducing to the community, we're finding that the problems in the industry or the drivers and the needs for change, they correlate around a number of common themes. So the cost base for financial institutions, for example, to make cross-border payments increases all the time, and that's driven by this non-negotiable requirement to be compliant, for financial institutions, right? Screening transactions, that kind of thing. You have, for example, the cost of managing liquidity to help with funding payments. So if you're a global payment business, you need to have liquidity and funding around the world. So that's one of the drivers. You also have a more intensive or challenging competitive landscape. There are many new entrants that have, frankly, very interesting ideas on how changes can be made to cross-border payments, changes in the realm, for example, of customer experience, processing efficiencies, different ways of doing things. That's really important. Data is a big driver as well. So the role of richer data to build out new experiences based on that data, and also to support that compliance function I mentioned. They are some of the examples of the drivers that lead to what we're doing from a strategic perspective. And so as a consequence of that, we have elaborated and communicated publicly a new strategy, which is framed around being instant and frictionless on an account-to-account basis around the world. And it's also a strategy designed to support financial institutions participate more fully within higher growth segments of payments. And by this, I mean the really large scale growth that's occurring in lower value transactions and retail and SME oriented transactions as well. So we have a strategy designed to do that. And the way that we're looking to achieve this with the industry is to introduce a new centralized transaction management platform, whereby the centralization of some of these assets, and specifically the payment record itself as a single record. The centralization of that helps the industry do these things. So to give you an example, if you have a centralized payment record and you have parties interacting with that transaction and they share, for example, common financial crime or compliance requirements, they can access those financial crime screening, other types of activities on a central basis. So they don't need to necessarily duplicate the investment costs in their own environment. They can access what has essentially been a mutualized service across the SWIFT cooperative. So that actually helps drive down cost. One other thing is I mentioned data. So the industry for some time has been moving towards ISO 20022, which is the richer data standard for financial messaging. SWIFT will be introducing for cross-border payments through the end of 2022, the ISO 20022 messaging, and we will run a period of coexistence for 3 years.
How is SWIFT working, especially in this use of APIs in the payment segment? Any interesting developments in that?
Yeah, we're adding new APIs all the time to our services, and we're also providing the software developer environments for financial institutions. So we have APIs today that access our SWIFT GPI service, for example. To be very specific, a bank can make an API call to the SWIFT GPI tracker and they can get a response back that tells that financial institution the status of the payment, right? Has it been credited or is there another problem with it? That kind of thing. So there are plenty of use cases like that. We have APIs for managing cases or problems that you might have with a payment. So you can call that there. You have APIs whereby you access reference data products that SWIFT has. And we're continuing to add to this library, if you like, of APIs, and including what will be a transaction management environment through this new platform.
So how is it going to change the global payment scenario then during what are your thoughts on this digital currencies, especially which are going to be around in the market in the future?
Yeah, there are a lot of experiments and a lot of pilots going on, Babu, and we've seen the direction, if you like, change quite a bit around there. Some markets are more interested in retail type use cases, right? A retail oriented currency. China is a very public example of that. Many of the other central banks are looking at wholesale use cases. We watch that space really, really closely. And the main things, if I was to step back and kind of objectively look at this, the main things that we're looking for is, okay, is there sufficient demand to transact in this new form of money? And the shorter answer is that demand does not exist yet. Yeah. If in future you have sufficient demand from financial institutions, there's trust in it, there's utility and a trend towards having more ubiquity and omnipresence, if you like, of this as well. At a technical level, there are not really, if you like, major things that need to be done to carry a currency.
And I read a lot about trade digitization as an initiative from your side. How is it coming up? What is the market offtake of this entire offerings that you are doing in the area of trade digitization?
So we've been doing a few things, really interesting work. One thing we found is, as the world unfortunately entered into this pandemic we're in, is that the movement of documents stopped. Yeah, and if you have an industry like trade that has a lot of paper, that presents a significant problem in actually, if you can't move and you have restrictions on your movement, you can't move paper from one party to another. So what we did quite quickly is we've always had a service in having digitized versions of letters of credit, for example, that are exchanged on an interbank basis through like a file exchange service on SWIFT. We put a bit more structure around this and we introduced this service to some of our largest trade finance banks, and a number of those have adopted that, and they carry now digitalized versions through those files safely and securely between each other in what would have in the past been carrying paper.
Let's go to the low value payments. Okay. There
Oh yeah,
has
low value payments. Yeah.
a lot of initiatives in the low value payments also from your side. How has it been progressing? What are the plans for this business of low value payments now?
So there's two main things here. So I mentioned with our strategy, instant frictionless account to account and high growth segments of payments, which is essentially low value and SME. And it's the instant, the account to account, and that low value segment that come together here. Two main initiatives, Babu. So when we introduced Swift GPI, because we could track payments end to end for the first time, we observed that most Swift GPI payments happen very quickly. And in fact, about 40% of our Swift GPI payments lead to crediting of accounts in 5 minutes or less. So 40% in 5 minutes or less. Remember, that's going around the world, often multiple parties involved. So the speed of payments is not really a problem today. Seeing that, many banks are actually processing some of these on an instant basis, and we've introduced a service level known as GPI Instant. And the idea there is to bring together the cross-border GPI payment experience and integrate that with the domestic instant payment systems, so that in Singapore, I can make a payment through my bank, and a bank in India will process that, for example, through the domestic instant system in India. The other service is a initiative towards capturing more of these low value payments for financial institutions. And the problem statement is a little bit different there. So if you think about what new entrants and other players in the payment ecosystem are doing these days, they're very focused on the upfront customer experience. So they'll build out a wallet experience or an application that a customer uses, and they'll present a lot of information up front to the customer as well. What we're doing with the low value payments service is we're building out some services such that financial institutions can provide that upfront transparency and predictability to the payment in their channel experience that they have with their customers.
Now, Swift has been looking at India, and you have been doing a lot of work in India for quite some time now. In terms of readiness of technology infrastructure to make use of Swift services, how far has India reached, or is there any more development awaited from Swift's perspective from the Indian banks?
So we have about 32 banks now in India that connect into our specific Swift India services. Those banks together capture about 75%. So they potentially address about 75% of the flows in the India market. And our emphasis is really to support the local India agenda, which is governmental and private sector driven, towards digitalizing the India marketplace, both from a payment context and trade. Payments locally in India, I think, is a problem not fully solved, but at least partially or mostly solved. So the domestic infrastructure is fantastic in India, right? The outcomes that things like the National Payments Corporation of India have achieved, and the UPI stack of infrastructure, fantastic outcomes. So, domestically payments, work pretty well in India. We want to be able to link into that from a cross-border perspective, as I explained earlier. However, there's a lot of open runway on trade digitalization. There is still a lot of paper moving around in the India marketplace supporting trade. And that's where we're really focused, is to be able to do some of the digitalization of those services so that, banks can exchange messages with each other in a consistent, standardized, highly secure and trusted manner. So that's much of our focus. We continue to engage with the financial market infrastructure landscape in India as well. More and more financial market infrastructure based locally in India are joining the SWIFT network.
My last question to you is, what are the new exciting things that you see coming from SWIFT in the global markets in payments? What interesting things you think see coming into the markets, especially from the payments perspective, in the road ahead?
Yeah, I mean, as an organization, we're very focused on introducing this new strategy, and to do that across 10,000 plus banks around the world is no small task. So there's a lot of communication and activity that works towards that. Watch out for really exciting services within low value payments, right? Look for financial institutions having, if you like, easier ways to optimize their customer experience that's provided towards the customer. Look for more in terms of the growth in the instant cross-border payment services as well. We clearly provide a key role in helping financial institutions and payment and settlement systems around the world facilitate those processes. So those two areas, I think, taken together, are really exciting for Swift as well.
Fantastic. I think that was a wonderful conversation, Michael. And that at least exhausts all the questions that I have had for today for you. And I want to leave something more for the next conversation so that we can keep on the conversation tempo on and learn more from you. So thank you very much for sharing all these interesting conversations.
Don't leave it too long until the next conversation, right? It's a fast moving industry. So we'll talk again soon.
Friends, welcome to Banking Frontiers. Today I have with me Mr. Syed Nasir Hashimi. He's the Deputy Chief Information Officer at Afghan United Bank. And we look forward to hearing from him what is interesting in terms of technology and how it aids business at his bank and in the country in general. So welcome, Syed. Welcome to Banking Frontiers.
Thank you very much. Thank you very much for this opportunity. I'm very happy that today I'm the guest for this program.
Nazir, my first question is this. What is the technology scenario in banking in Afghanistan? And what are the recent modernizations that have happened? And has the pandemic made a difference in the speed of digital transformation in the country in banking?
Sure, as we all know, this coronavirus pandemic badly affected the entire economy of the globe. I mean, the entire countries. So Afghanistan is also, not the exception. This coronavirus pandemic badly affected the entire economy. Afghanistan is an import-based country. The number of, the impact of this coronavirus was much bigger compared to other countries. I can say the only sector which was not slowed down during the coronavirus pandemic was the information technology. After this pandemic, everyone or every organization or businesses was looking for alternative way to deliver their services, to deliver their businesses. Most of the universities, they have gone through online education systems. So that was only by the help of information technology. The value, the demand for the information technology during the pandemic was more day by day increasing. Now I can see, most of the business, they are thinking about their redundancy, the business availability in such incident. They're more focuses on business. I can see example of Afghanistan. Here people are, just believing on traditional banking. They are preferring to go to the branches, visit the branches, do the cash withdrawal or cash deposits and sort of things. But during the pandemic, they have understand the value of online banking, how the online banking can help them, how the online banking will help the economy. So even the as an organization, our part of the strategic plan is that we have to add more value or more investment on the technology part for the future. We should think about the alternative and availability of the business in such in case if in the future we face such situation.
Okay. Do you have some figures about the change in the usage of digital technologies, internet banking, cards, ATMs, etc., after the pandemic started, so almost 11, 12 months have passed. What has been the change in shift from branch banking to other alternative channels?
Sure. This is, very crystal clear for us that day by day after the pandemic, or even in this last 2-3 months, the number of users for the internet banking is getting increased. During this time, we had the customer awareness programs that, on TV, through different campaigns, that how people or how our customer can use our services. And understand the value and the importance of usage of cards. Apart from that, there is the government of Afghanistan, or the Central Bank of Afghanistan, is thinking and enforcing all the banks to have proper plan for the implementation, increasing the number of ATMs, a proper strategic plan for increasing the number of customers and people awareness. Currently, the salary disbursement for all the government employees are through wallet services or through banks, where customer, they will get their salaries through their wallet, and their wallet is connected with the. Somehow, day by day, the education level is getting, higher, and they will understand the usage of the banking, online services, ATM, POS, and some other channels.
Has the POS network grown in the country in the last 12 months?
Compared to ATM, the growth of POS is not that much. One example, the reason or the changing point is that few banks in Afghanistan, in the earlier, there was no country hub or country switch available. That is why most of the banks are connected through an alternative payment gateway, which is out of the country. The charges or the recurring charges for a merchant or for a shop that, to have a POS machine is much higher, much high. That's why the growth of the POS machine is not that much high. But by the implementation of Afghanistan payment system, their main focus is just to increase the business. They are not thinking about the profit or generate profit. Their main intention is to reduce the cash-based economy or cash-based transactions. They have to go to on non-cash based, which is ATM or mobile payments and some sort of payments.
Okay, I think that's a good move. So what kind of alternate banking channels have actually taken off most rapidly for your bank? So is it ATMs or is it your cards? Are the cards used mainly as ATM cards or for e-commerce or something else?
Fortunately, Afghan United Bank, for the first time, we have launched the e-commerce platform in the country. We were the first bank got the license for the e-commerce. We had too many businesses here, which was online businesses, but they were on cash base, or the delivery was on cash base, and the risk was very high for those businesses. That's why for the first time we have launched the e-commerce, and on daily basis we are onboarding too many customers for the e-commerce platform. Apart from that, we are integrated with the global payment gateway of e-commerce, Visa and MasterCard.
Okay.
Yes, we have around 50 plus ATMs across the country. More than I can say, more than 20,000 MasterCard and Visa card users.
Okay.
Recently, just the Central Bank of Afghanistan has launched the Afghanistan payment system, which is the country switch. All local banks are integrated with the local switch of APS. This will facilitate the all users to do cash transaction. Usage of ATM or POS with very minimum charges. We have suppose 20 halves or 10 halves per transaction compared to international payment gateway that was much higher. Apart from that, we have launched the mobile banking application. We have our mobile application. We have the internet banking platform, where at any time 24/7 our customers can do the transaction, interbank transfers, they can do the balance check, they can do their bill payments. We have facilitated all our customers, and our vision is that we should be a yes bank. If customer is asking for any services, We know that in the current Afghanistan market is not that much big market. We have very, we should not compare major cities. And that's why ultimate customers needs and they should understand the usages of our platform, internet banking, mobile banking, and e-commerce.
Okay.
Yeah, competition is very tough in the market. Currently, we have there are around 8 commercial local banks.
Okay.
Beside that, there are three governmental banks and 2 international banks. But the market is too small. The competition is too tough, and customer, we say the customer is the king. We have to offer them whatever they want. So that's why, as part of strategic plan, we should have, we should never say no to our customer. All services, all available. If that is our product or if that's online services, we are offering.
Fantastic. Can you give us a brief overview of the e-commerce scenario in the country? In India, you have e-commerce for purchasing things, for food delivery, for booking hotels and flights and railway tickets. These are some of the most common uses of e-commerce in India. What kind of e-commerce potential is there in Afghanistan?
During last 6-7 years, there was a rapid increase in the online businesses. We know online business will help those people who are busy, who cannot go to the market or cannot, they will not have time to do for shopping. There is rapid improvement in the in this sector as well. Currently, we are in touch with the different businesses like travel agencies, with airlines, with some other services, tourism services. The people booking their taxi while coming to Afghanistan. Apart from that, normal shops, in Facebook or in some other social media, they had their websites for online services, but they able to have the e-commerce facility that the customer should do the payment. We don't have Amazon here in Afghanistan, but we have some other very big companies like Click.if. Click.if is a big company right now. The customer from all around the globe can use our cards or MasterCard or Visa cards, and they are integrated with our e-commerce platform. They can order their goods, especially Afghanistan famous for the right fruit. They can order foods, they suppose carpet. They can order just through their cards, and the payment will be done on immediate basis.
Okay. Very interesting. Very interesting.
Thank you.
In terms of technology, going back to technology, what are the new applications that the bank has deployed in the last, let's say, 1 or 2 years? And what more is the bank looking to do, improve its technology in the next 1 or 2 years?
As I mentioned earlier, there are around 8 commercial banks and 3 government banks. They are using the world #1 technology. Afghan United Bank is currently using the Oracle FlexCube, which is one of the top world core banking system, which is very expensive. Okay, investment is the one part. But the interest for the investment on technology is much. So the technology point of view, all banks, they have implemented the world top technology. Apart from that, we are integrated with different international well-known companies for the risk point of view or compliance point of view. Okay. We have proposed the equity solution for the online customer screening. We have deployed the Safe Watch profiling for the customer profiling, transaction profiling. Technology, we are on advanced level, or not only Afghan United Bank, but I can say most 80% of the banks are using Oracle FlexCube for their core banking system.
Okay. In India, we have Aadhaar as a very common platform for onboarding customers very quickly. Some banks can onboard a new customer in minutes using Aadhaar data and their fingerprint, for example. What is the customer onboarding improvement in Afghanistan in your bank? In the
currently, customer for the customer onboarding, there is no any online platform available that customers should do their onboarding online. because from the compliance point of view, there's too many restrictions. Afghanistan is in the gray list of the FATF. That is why, the customer screening needs to be done on high level. But we are part of the strategic plan. We have the plan to implement the customer onboard solution that it should not take much time for the customer, and the customers, we should have a single KYC platform. Customers should not be required to do several level of, registration for different services. Okay. In a single registration, customer will be able to get their card that will be registered for the SMS banking, for the mobile banking. The process for the customer onboarding is too simple.
Okay. And how has the business been during the pandemic? Has credit demand maintained or risen? What kind of banking services are more in demand after the pandemic?
During the pandemic, I can say, the bankers, apart from, beside the doctors, were the second sacrifice for this pandemic. Because we were available for the customer to serve our customers. After the pandemic, as I mentioned earlier, the demand for the alternative is much. Even customers are demanding to have the alternative access to their accounts. They should, have they're using their cards for the payments. They're using the mobile banking for the bill payments or for the utility payments. The demand is day by day increasing after the pandemic, and we are receiving too many requests and new requirements from the business point of view that currently we are working, and in short time we are going to implement several other projects. Okay.
So basically the scale of payments business is scaling up as one of the main results of the pandemic. Okay.
Exactly.
I think that's good, because that's what is happening everywhere in the world. People are doing more and more transactions, and the banking system is able to cope up and deliver that. And that increases the velocity of business, the velocity of cash flow, which ultimately benefits everyone. That's great.
Benefit the banks, benefit the organization, and entirely, that will benefit the economy of the country.
Correct. Fantastic. Thank you very much, Nasir, for that overview of
thank you so much.
And of your bank. And we wish to hear more from your bank on other issues and more of Afghanistan banks in the days to come. Thank you very much.
Thank you so much. Thank you very much. Thank you.